And here we are with your Wednesday evening market wrap-up for SPDR's ETFs and stocks on the 15th of February, 2023, about 6:25 p.m. All right, you have a tale that's a hard one for me to explain. You've got different things going in different ways. Number one, today we saw retail sales, stellar number, 3% gain. Yesterday it was CPI, through the roof, not what the Fed wanted to see. Beginning of the month, we saw labor data, right through the roof. Okay, I understand there's a lag effect. I understand the word that we had temporary, that the things were there. Maybe this isn't a lag effect. I don't know. But how long does it take for those interest rate hikes that are now how many months old to start having the big impact? We saw it have it in housing. And here's what bothers me. I'm getting reports now from Zillow, Amherst, and all these. There was a big report, I think it was in the New York Times tonight, about different companies and their viewpoint on what real estate's headed. You're pretty well split. Some think that there's more decline ahead of us now and into early 24. And then the other split is we've already bottomed out and we're going to see the markets going up. Which one of these do you accept? Now it's getting interesting. What we've seen is interest does pick up if interest rates fall back to 6% or less. When we were at 7%, we shut off the market. 6% is different. And we're seeing home builders are making money. What's going on there? Tomorrow we get housing numbers, so you want to be all over those to see what's going on. But my argument is this. The market has challenged, straight out challenged, saying to the Fed, you aren't right. You can raise rates, but we're making more money. The labor's so strong, 3.4% unemployment and wages going up. Maybe not running the way they did, but they're not coming down either. They're still moderately going up. We're seeing CPI go up. Okay, we can handle that. We're still spending money. We got credit cards and we're buying. Now we'll see how businesses do. Then I look at the earnings. Like today, Cisco comes up. Stellar earnings. And you talk about the headwind of the dollar. Well, remember, if you look at the fourth quarter and you look where the dollar index is now, it's actually a lot lower than it was at the peak in the beginning of the fourth quarter. And they're making money with that. So I think it's a confusing time. And which side of this is going to win out? So far in the stock market, the bulls are winning. They are beating the Fed. In that vein, these meme boys that were buying all these stocks and driving them up, the SEC hasn't forgotten you. Welcome to their gun sight. Now they are looking on certain aspects of the market, and we have what's called trade date plus X amount for you to get your money into your brokerage firm. They're now talking of T+1, which means you buy it today, you got to have your money in your account to own it by tomorrow. You get a certain amount of time with your brokerage firm based on margins where you're at to get a certain leeway. They want to take that away from you. Okay. The SEC is going after, as you know, the Coinbases and the like. So the tightness is coming of all this, and you're going to feel the impact of it, and it will change the way some of these stocks move. It wasn't lost how you guys that do that, the Reddit boys and Robinhood, what went on, you're in their eyesight. It doesn't go away once you're there. When I look at the S&P, I'm a chartist and I stick with what I know. So it's fine that I start off with my monologue each night and I never prepare it. It just spits out of me. But when I go to the chart, I'm another person. I'm a Jekyll and a Hyde. This is a consolidation pattern. I didn't say it's going to move out, up or down. It's consolidating for a move. When we look at the chart action, you have a higher high, lower low. There's nothing there yet. When we look in SPY, we can see that the market has been unable to get back under since the beginning of this year, the 18-day average of closes. And if you accept my philosophy on this, that means you have a bullish bias. When you're under it, you have a bearish bias, all right? It has served me so well for so many years. The bias is a filter on other technical indicators. So if I have a sell signal above the market and my bias is up, the two counter each other. If I have a buy signal under the market, but my bias is down since I'm under the 18-day average, the the two nullify each other. I have found this serves me very, very well. Next, I go in and I look at everything. Everything being where are the Bollinger Bands, where are the key moving averages, and what are we doing in momentum? Momentum's overbought. My philosophy is overbought does not attract new buying money that stays with the market. Embedded does. So if you get an embedded reading, let's see if we have some here. Yeah, that stays with the market until it's lost. That stays with the market until it's lost. Are we going to embed? Embed, I think you're going up, like I said yesterday, to the upper Bollinger Band. Don't embed and turn down a problem. The market, though, has the upside bias. When I go to UGA, I did my special report. And by the way, I'm looking to do another one of these now. I spent the whole day going through charts trying to find what I want to do, and I didn't find anything yet. I will. But as I said, I think this market's going to start fighting a battle right now at the 18 and the 100-day average, getting itself ready for the spring and summer months where I expect gasoline demand will pick up and prices will pick up with it. Could I be wrong? I could be very wrong. But that's what I am expecting, and the report showed why. Apple. Now, Apple pushed back today its VR set. I don't know why, but it did. We'll see if it impacts the stock, yes or no, tomorrow. But you've got higher lows, higher highs. You're overbought as can be. I can't tell my clients to buy an overbought market. AMC, when you got down to the Bollinger Band and you're not embedded, I teach this. You come out. When you got up to the upper Bollinger Band right here, I don't care if it got there. You come out. So momentum down, out. Momentum up, out. But you haven't had a trend. You've had momentum swings, but you haven't had a consistent higher low, higher high, or lower high, lower low. It's just a momentum trade. In XLF, if you get under 3607, the chart should roll over. The momentum is rolling, but it hasn't rolled down. If you get up and over right now, 3708, you probably go to wherever the upper Bollinger Band is, but I wouldn't expect it to have legs to the upside. Could I be wrong? Very, but that's what I'm seeing. In XLI, overbought, no trend. Higher high, lower low. I don't know what to do in a market like that. And guess what? When you don't know what to do, you do nothing. You wait your turn. You're going to have plenty of chance to be wrong. Did you hear what I said? You know I'm being honest about that. You're also going to have plenty of chance to be right. But nobody wins every trade. I mean, I'm sure there are legendary people that are running ads all over the internet explaining to you how you can make your $15,000 a day. I take them off my YouTube page every day. If they can make that money, what do they need you for? If you made $15,000 today, $15,000 tomorrow, and you start taking that money and you add it, and you're putting a little more into the market than that money, at what point do you own the whole game? That's what they're saying is going to happen. XHB, lower highs, lower lows, trying to now get back up and over right here. It's going to send the market. In fact, I think it did it. I missed it, this part. It's already over that. So you got an arrow up, an arrow down. You're not in a trend. Energy, going nowhere so far. Now, I think it's fascinating this week in energy. The API numbers, came out yesterday at about 13 million built, which I thought was fabulously bearish. Where's all that stock? My God, what's going on here? Today, the EIA comes out with theirs, and they're at 17 million. And I'm going, and the market's not breaking. I don't get it, okay? I understand fundamentals pretty well. I didn't understand that, and I'm sure there's a reason for it, but I just don't get it. Higher high, lower low, you get bare numbers and the market doesn't break. That means a bull number is going to make the market go bananas. In GLD, if the dollar's going up, the gold is going down in this environment, and people are looking at the stock market and saying, what do I need gold for? It doesn't pay me anything. I've got a choice of making money on 5% return on some short-term treasury instruments. What do I need to own gold for? And the stock market's not looking too bad to me. Out of favor, slipping away. Think about that. Then you get the silver. Interest rates high, dollar high. No, you're not seeing it. Now, in China, we stop here. Let's talk about this for a minute. There was a report today, and I think the New York Times, and I have it in my newsletter. I'm pretty sure it was the New York Times for tonight when I publish. And China's claiming 83,000 people died between the end of the COVID and the lunar holiday. Congratulations. Those people that track what happened in the United States, Europe, and other countries have taken the numbers and extrapolated them. Nobody's under 997,000 probably died, up to 1.5 million. I'll show it to you if you get my full newsletter. It's in there tonight, and I show you the graphs as to how they're predicting it and what went on. That would explain, and that's all that I say this for a reason. I said, number one, you can't believe China on diddly, okay? They lie, lie, lie. That's the word they do. They're great liars. I'm talking the government, clearly, not the people, the government. As we come into this, and you got to ask yourself, is there reality? Maybe I'm wrong. Well, then copper should be going up. Then we should be seeing demand for energy out of China. We're not seeing anything being bought there. They did buy a cargo of coal recently and got that, but I'm not hearing that they're doing big buying anywhere. Are you? Maybe I'm wrong. And wouldn't that tie in if COVID were so bad that there's lack of demand at this point in time? And I realize there's a certain other part to it, that over the lunar holiday and at the COVID that they had prior to it, things had slowed down anyways. I accept both, but they're still not buying. And there's a lead time to buying and getting it sent to you, and that is problematic. Copper is a great example. The copper market right here is when, if you think about it, that's the end of the lunar holiday, right through here, and the market came down. Other people were seeing just what I am, and it's being reflected in the market. Now we get to the U.S. and the TLT, and I realize there's two schools of thoughts here. I happen to be in the school of thought that the Fed will win the day, whatever that means, in terms of raising rates and keeping them there higher. I am not in the Fed's camp that they're going back to 2% inflation. I think that's a fantasy dream. I don't expect it unless they absolutely wipe out the U.S. labor market. Then that can happen. But where are you going to go? You're going to go from 3.4% to 4.5%? That's not wiping the market out. That's still a historically low number for unemployment. And that would be up a full percentage point from where you're at. So the two schools of thought are at work here. Number one, people are making a lot more money. If they want to leave one job and join another, they're hopscotch for jobs. I don't like this one, I'll get a higher paying one with that one. And they're doing it. All right. And, if you read the resume, you're probably going, this guy doesn't hold the job, but I need somebody here. I'll give him a try. That's what's going on. And he's not going to take $18, I want $18.50, or I want $20, I want $22, and you need the help, you're doing it. The service industry, I brought it up yesterday, and I think I hit it on the head. How could Airbnb be doing so well without the service industry supporting all these people that are renting? And when you go out and you're renting an Airbnb, you're going out to dinners and you're doing this, they need people. The service industry's on fire, and guess what? It's February 15th. The hiring's going to begin. I remember when I was a kid, I'm dealing 16, 17 years old, I would go work at resorts for the summertime. And they throw in room, board, and what a time. It was the time of a lifetime. I don't know if any of you ever did that. It was phenomenal. I got paid. I had a ball and pretty people. It was a dream come true. I used to work at front desk. I started a busboy. I wasn't going to keep being a busboy, so worked my way up. But it was something to see and something to do. And I ended up at the end racing cars where I did that in Elkhart Lake, Indiana. It was just too funny. But you hire. That's my point, not what I did. You hire, and you keep hiring, and you got to start hiring soon to get these kids before they lock up jobs for the summertime. So there's things going to happen here. And I'm just giving that example. Think of every restaurant that has outdoor space in the Midwest where you can't use it right now. You open it up. I know Chicago goes crazy. If you have never been here in the spring and summer, come. When this city's working, we're going to get a new mayor, I think. It'll work beautifully. Get rid of this one. It's something to behold. All right, UUP coming up to the resistance at the at the upper Bollinger Band and going down for support in FXE. So you put it together, it's a crazy time in the market. And I admit, I see the battles going on, and it's a difficult trade time. Difficult leads to easy. I know it sounds crazy, but there's a natural progression to it all. You know, we talk about this and other things in our futures trading kit. Now, you'll say, this is an ETF report. Why are you doing this? Because your ETFs are based on it. Come on. TLT, USO, GLD, SLV. You want me to sing the song? SPY, DIA. They're all based on futures. Learn about the futures. What makes them work? How do they work? What's going on? The patterns that work in futures are the same patterns that apply to your ETFs, your SPYs, the individual stocks. The courses that I include for free in this, the pivot points, the Arun indicator there. You want to see this, your cause and effect. It's more important than ever. M1, M2, M3 in the money supply. Fed talks it. And all the free courses, and they keep coming new ones on all the time from the CME group. We latch into it, make it easy for you to get everything. How do you get this? Just go to our website under free offers for your free access. You can also at any point click up here and away you go. Sorry for being so lengthy, but there's so much to talk about right now because it's such an interesting time. I'm Big Mouth Ira. I'll talk to you tomorrow.